Awesome. Well, thanks guys for joining. This is like an intro to Bitcoin course I put together. I didn't really write a whole curriculum, but I put these slides together so it's a little bit kind of it can kind of like drive my presentation a little bit. So here we go. First things first, why Bitcoin? Like why do we like don't we already have digital money, right? We have debit cards and credit cards. The thing is, those are digital representations of the fiat currency that we have, so we don't technically have true native digital currencies yet. That's why the central banks are talking about making their own. So, even though we can spend electronically, we're not spending true digital currency. So I just want to get that out of the way first, because some people get confused as to what it is. This is really a really important thing, though. A lot of people don't understand what money actually is, and so I just wanted to go through that. So before we had the invention of money, the only way we can commerce was barter system, right? So if you think about how inefficient that is, if I'm a farmer and I wanted a goat, and I wanted to trade a goat farmer my chickens, if he wanted six, I had to give him six. But if I go to a different goat guy, he might want like 10, right? There's no unit of account. So the invention of money was one of the greatest inventions of history because now we have a universal unit of account of assigned value, so that we can assign value to specific items and they stay on those items, and so we can all commerce with each other, normally. So that's one attribute of money. The other one is store of value, right? It maintains value. So if you have a dollar bill, it's a dollar bill. There's value within this thing, right? Medium of exchange. This one's a little bit iffy because a lot of things you can use to exchange with, like barter, but money is the primary medium of exchange. So use it to exchange for goods or services, right? And a bearer asset. It I don't think it's currently a bearer asset, but it used to be. So bearer assets are like stocks or bonds. It's basically a legal tender, a paper contract that says this person owes you this thing, or whoever's the holder of the asset is owed this thing by somebody else, right? So that's like stocks or bonds, but it used to be paper notes too, because that's how money was created, right? We used to use gold. After a while, people stopped wanting to commerce with gold because it's big and heavy and stupid. So they would lock him up in a bank, and the bank would give you a note that says you have this much gold here, and you can exchange this note with each other, and it's got some value in it. So that's a bearer asset. So that's how we got the fiat currency. Used to be backed in gold, not anymore. And the other thing is fungible. So it needs to be something that has value that you can transfer with each other freely, but it's not unique, right? Because if you have a diamond and I try to transact with you today, and I come back with another diamond, the other diamond tomorrow might be different. It'll have a different value. So you need something that's like fungible, that's exchangeable, but it's like indistinguishable from each other. So your dollar bill is the same as that guy's dollar bill is the same as that guy's dollar bill. So we can all commerce with each other and exchange this thing without any issues. Any questions? No. Cool. Let's go to fiat currency, the most biggest scam in the history of man. So fiat is actually Latin for the word "let it be done." So when I hear the criticism about Bitcoin being that it has no intrinsic value, it's not backed by anything, well, in the name of fiat currency itself, USD, Canadian dollars, is the fact that it's not backed by anything. It's a name. Let it be done, meaning it is what we say it is. So I just wanted to get that out of the way because it irks me to no end when people say like Bitcoin has no intrinsic value. Well, neither does the USD you have in your pocket. It's inflationary, so you can create more, right? So it devalues what you already have in your hand. Central banks control it. So these are all the cons that I have that I wrote down for fiat currency, right? There's central banks. There's always a central authority. Ever since there's been money, there's been central authority. Either they're kings, tyrants, or central banks in our case, and they have control over it. And the thing is, I forgot what famous person said this, but it was one of the greatest quotes I ever heard. It was that he who controls money controls the country's military, which is true because this is true control and suppression of people. If you control the money supply, then you control the people, right? So that's a con, and it's inefficient, right? How is it inefficient? Well, one of the biggest criticisms of Bitcoin is how much energy it takes for the miners to use and secure the network. The thing is, if you think about it, how much money does it cost to secure our current financial system? How much energy and money did it cost to build the infrastructure, the buildings? How much energy did it cost to power those buildings, their servers, pay the people, pay the security guards, brinks? Like the price is astronomical, right? So it's inefficient. The other thing is it's expensive. Like if you wanted to send, $10,000 from one bank account to another, you're going to be dinged a pretty large fee. And it used to be you can get interest in a savings account, but these days you get nothing. You're lucky to get nothing, and sometimes you have to pay a service fee. So it's expensive and inefficient. So those are my cons for fiat currency, which brings us to Bitcoin. Now, before I start with the money portion of Bitcoin, I wanted to start with the blockchain portion because I think that's the most important part. So I think and feel free to stop me if you have any questions because I know the blockchain can get a little complicated. But basically, the blockchain is a decentralized ledger. So decentralized means that there is no central source. So there's no server room. There's no one location where all the information is stored. It's everywhere. Every miner, every node is a part of the blockchain equally. So if one miner or one node disappears, the entire network continues without issue. So that's one of the beauties of a decentralized network. And why I say it's a ledger is because it's a ledger, right? Essentially, it's not a computer, it's a database. So the entire blockchain is just a database of transactions. It's that simple. Proof of work, you might hear this a lot when you listen to people talk about blockchain. Proof of work is basically the security mechanism for the blockchain. I'll touch on that later, but that's what proof of work is. And the blockchain is, Bitcoin is deflationary. So there's only ever going to be 21 million units ever minted. That's what the miners get in terms of rewards. And because it's a finite resource, it's designed to increase in value as time goes on. Unlike fiat currency, where we've seen that as time goes on, you're getting more and more supply, and it's becoming more and more worthless. All right, let's go to use cases. And again, feel free to stop me at any point. It is censorship resistant. Not your keys, not your wallet. So one of the biggest quotes in the Bitcoin or the crypto community is not your keys, not your wallet. Like you see the stories of idiots losing their hard drives or they're forgetting their passwords and losing their Bitcoin. So that's being talked about as a con for Bitcoin, but that's one of the features. That is a security feature of Bitcoin because the onus is on you. The entire responsibility of your financial health is on you, and that's a feature. Because if you look at what happens in our banking system, and it goes back to having a central authority, is if you piss off the IRS, they can seize your account. If you piss off a bank, they can forfeit your account. If you piss off the authorities, they can freeze and forfeit your account. Basically, the money in your bank account is not yours. It's not under your ownership at all. And I think a lot of banks, if you go through the contracts and the terms of service, it'll actually say your property is theirs. So that's one of the greatest things about Bitcoin is that it's a decentralized system. There's no Bitcoin CEO. There's no Bitcoin organization. It's a system that runs by itself according to the rules that was programmed in it. And as such, no one can seize your Bitcoin. No one can take anything away from you. It's completely under your control. So the fact that people are losing keys and whatnot, that's their bad, but that's a feature. Again, it's deflation. It's only ever going to be 21 million units ever. I think right now, every block of Bitcoin mines 6.25 Bitcoins. So every time a miner mines a block, that's how much they get in rewards. Up until this point of 21 million, then there's no more Bitcoin ever created. The miners are just making money off the fees, the transaction fees. Banking and commerce. Okay, so this is one of the biggest use cases of Bitcoin that most of us never think about, and it's the people in the third world. Like you got at least almost a third of the world that's in extreme poverty right now. And a big reason for that is because they don't have a banking system, right? Banks find it unprofitable to help these people because they do microtransactions, they have no savings, so there's no banking infrastructure in these places, right? So it's all money. That's also how dictators can keep control of the places like that because without a banking system, then money is 100% control. So 1.7 billion unbanked. Believe it or not, there's actually quite a few million. I think it's in the tens of millions of American citizens who are unbanked for various reasons. Maybe you have a criminal background or you're just you're just kind of off the grid. But there's a lot of people around the world that are unbanked, and this is a problem to get people out of poverty because if you don't have a if you don't have a financial system behind you, then it's really hard for you to do things like get a job. Like unless you get paid in cash, where's your check going to go to? Like where's your savings going to go to? Your mattress, right? There's a lot of things that being banked helps with that we don't really notice because we've always been banked. The other thing is there's a system called SWIFT. It's an organization I think represented by 26 countries or controlled by 26 countries, but it basically controls the entire banking system of the world. All the banks do their transactions and give each other communications via the system. And it's also how the US maintains control of the world. It's not just their military, it's through finance. So when Russia does something that pisses off the US just tells these organizations, hey, we don't want you to do any transactions with Russian banks or Russian or anybody within Russia to basically create a financial embargo. So the USA maintains control via money of countries that they don't like or that piss them off with this system. So that's why Bitcoin is amazing, because it's the internet of money. As long as you have internet, you can commerce with each other. Nobody else has a say so what you do with the money. It's decentralized. So I go through that again. It's a trustless system. So that means you can trust the system to be honest and do what it does, as opposed to what we have now, which is we have to trust our bank to be honest, right? We have to trust our government to be honest. We have to trust all these intermediaries in our financial system to be honest. And clearly they're not, because we have such a huge lawyer suing system where, people are being caught obviously all the time not being honest. So that's one of the best things about Bitcoin, is that you can trust the system to be honest. All right. Next slide is the double spend problem. So this is one of the biggest innovations of Bitcoin's blockchain. And a lot of people don't realize this because they think because we have debit cards and credit cards already, that digital money is just not that special. But if you think about it, like the only reason our debit cards and credit cards work is because the bank says we have that money, right? They're the final authority, right? When people do transactions, either you with the merchant, me with PayPal, whatever, the only reason PayPal believes that I have this money is because this bank is backing it, right? When you create a digital currency that no one's backing, you have this problem called a double spend problem, and it's taken decades to fix. Which means, because like basically a digital copy is a perfect copy, right? Think Napster, think BitTorrent. If I send Blake an MP3 and I make a copy of it, and he sends that and sends it to 10 other people, each of us all have the perfect copy of that one MP3. So creating a digital currency is a huge problem because people can create perfect copies of each other, right? And so what the Bitcoin blockchain did was it created a system. That's why it's called a ledger, because the only way to get past the double spend problem is to create a database of transactions that goes on throughout the entire history of the chain. So if I wanted to see who spent what in 2011 on the Bitcoin blockchain, I can do that, right? So each time Bitcoin is spent, it is recorded in a ledger. So you can't double spend because it will be recognized on the system. And so that's why the blockchain is important. That's the part it plays in the financial system, right? That's the only way to avoid this double spend problem. Now, this creates another problem, though. It's called the 51% attack. And that's actually the only way to hack Bitcoin. Because you hear a lot in the news that Bitcoin, because it's a computer system or whatever, that it's, it's hackable, whatever. There is only one attack vector for Bitcoin. You can't hack my Bitcoin account and steal my Bitcoin. It's just not possible. What you can do is do a 51% attack. So that means if 100 miners are securing blocks for the system, if I create 101 miners over here, and we're creating our separate Bitcoin blockchain, what you could do is you could double spend. So I could spend my Bitcoin, then I could quickly make a block, put it to the chain that said I didn't, and I could spend it again. And you could keep doing this over and over and over again, right? The problem with the 51% attack is, like, the other complaint about Bitcoin is how much energy it uses. Once again, that's a feature, not a flaw of Bitcoin. The proof of work and the amount of energy it uses was by design created so that you can't do a 51% attack. Because right now, Bitcoin takes about the entire energy of Switzerland to mine. So basically, if you wanted to attack the Bitcoin blockchain, not only do you have to spend hundreds of millions, probably billions of dollars by now, to buy the computer power to attack Bitcoin, you have to spend the electricity to do it, only to get a 51% attack once, because a block is mined every 10 minutes. So you have to keep attacking it, right? And the only thing you could do is respend the Bitcoin you already have, right? So while it's technically possible to attack Bitcoin, most people, including myself, consider Bitcoin unhackable because it's just stupid to do so. Like, who would waste $1 billion to attack Bitcoin to spend like one Bitcoin? It's ridiculous, even if you have a lot of Bitcoin, right? So that's Let me know if I'm going too fast, but that's a double spend problem. So that leads us to what is mining. One of my biggest peeves when I hear online, when I hear like analysts or economists talk about Bitcoin, or they're asked to explain Bitcoin, their answer is always, "Oh, the miners are solving complex mathematical problems." Whenever I hear that, the first thing that I think about is like, "Wow, you don't know shit about Bitcoin because there's literally no math in Bitcoin." At least that's not what the miners are doing. It's not. What they're doing is a brute force attack. So what's a brute force attack? So it's like if you wanted to go into someone's locker and it's a 4-digit combination and you don't know the combination, the only way you could basically get into the lock is to go brute force it, to just try one combination at a time, going down the list of possibilities until you reach the one. That's what a brute force attack is. It's just dumb brute force, right? And so that's what the miners are doing. I'm going to get into it on the next slide, why they're brute forcing the attacking themselves, but that's what it is. And what mining basically is just they're just securing a block. So we'll go to the next one and it'll be a little bit easier. So if you can see my mouse, so pretend this is a block, right? Within each blockchain, the most important thing in there is this Merkle root. Merkle root has all the transactions spent within that 10-minute period. And it has information from the previous block and their software version they're running and a few other things. These things are secured in a block called SHA-256. It's a security algorithm. And these things get thrown into a hash, which, so I don't want to get too, if you want to know how SHA-256 works, I'd love to do a video on it because it's really amazing. But if just to keep it simply, what its job is to jumble up the data so that no one can read it. So basically, it's just a cryptic algorithm, right? So you throw all the information of this block into SHA-256. Out on the other side, you get spit out. I think it's a 64 hexadecimal unit string of text and numbers, right? And that's the hash. And so if you take that hash, it's worthless to you because you don't understand the information in there. But contained within that information, if you throw it backwards, it spits out all this information. It spits out all this, all the information contained within a block. And so it's a really great way to compress data and secure it. So I talked about mining and a proof of work, but I think the most important thing here is wallets, because people don't actually understand, and it's not their fault. They don't understand what wallets do because they're called wallets, and I have one here. So this is Ledger. It's basically kind of like a USB key. So I plug it into my computer anytime I want to do a transaction. But essentially what it is inside they have a secure element chip, which is what you have in your what do you call it? Your iPhone that holds your fingerprint data. And so basically all the information contained within this thing is contained within itself. And so whenever I want to do a transaction on Bitcoin, you can hack my computer. You can see how much money I have, but you can't spend it without me plugging this into the computer and entering code. So that's what wallets are. But essentially, though, these aren't wallets because if you think about what a wallet is, you hold your money in your wallet. There's no money in here. My money's on the Bitcoin blockchain. This is just keys. So these should really be called keys, right? So there's a difference between hardware wallets and software wallets. So this is a hardware wallet. These are the most secure things you can buy to secure your Bitcoin. A software wallet will be like a piece of software like Exodus or Jax you can download as an app on your phone or on your computer. And they're called software wallets because it's just software. It allows you access to your Bitcoin blockchain. But the problem with that is, again, if somebody hacks your computer, you know they might be able to get access to your computer or your holdings, and then that's it. So this is why these are the best. What I install on my computer is just an interface. It doesn't actually have access to anything. The access is here. And you might hear the term cold storage when you get deep into crypto. Cold storage just means this: anything that's offline, that's cold storage. And if no more questions, we'll go to the next one. Cons. So we touched on this already. So I always hear that Bitcoin is not backed by anything. There's no intrinsic value. Well, ask anybody what the intrinsic value of gold is, right? Because everybody's argument about Bitcoin is, oh, it's only worth something because the next guy says it's worth something. The next guy might pay more for it. Well, it's the same case for gold. I can't think of another use case for gold. It's not a piece of technology, right? Blockchain is a piece of technology, and I can go into that later. But gold is just a hunk of metal, right? That somebody said it's worth something, and we just continued on with that throughout the ages, right? It's not even as rare as people say it is, right? Even fiat currency. Fiat currency is backed by a promise. The promise that your government will maintain its value. The promise that your government will enforce its value. But as we've seen in, I think it's Argentina, the government just woke up one day and said, hey, you know what? We're going to create this new dollar called the petrodollar, and your old money's worth this now, right? That happens. It happens a lot. And so the fact that, they say Bitcoin's not backed by anything, well, it's a stupid argument because nothing's backed by anything, really. Hacking 51% attack, we went through that already. Waste energy, we touched on that already. Bitcoin's energy consumption is a security feature. It's not a flaw. It's meant to consume a lot of energy so that it disincentivizes people to attack it or makes it impossible to attack it. A lot of the developers and the inventor of Bitcoin, Satoshi Nakamoto, they've said a long time ago, the time to attack Bitcoin was something like in the early 2011, 2012, there was enough computer power in the world. You could rent enough computer power in the world to attack Bitcoin successfully. But today it's not possible anymore because of the miners. And then ownership concentration. This one's fun. I hear this a lot. So the other big argument about Bitcoin is, there's all these Bitcoin whales, the OG guys that used to mine on their laptops, they got thousands and thousands, it's all hoarded at the top. That's just simply not true. So here's a slide of the Bitcoin distribution, right? First of all, I want to say the top 1% of the world has 50% of the world's wealth. That is an asymmetric distribution. This is not, right? So this is the most recent information from Glassnode about Bitcoin accounts. So shrimps, there's about 22 million shrimps out there. So people with less than one Bitcoin, 560K crabs, and it goes so on and so on. So when people read the stats about how the Bitcoin concentration is high, what they're doing is misinterpreting the stats because they're looking at accounts, and some accounts have like hundreds of thousands of Bitcoins, and they assume that's one owner. But those accounts are actually the miners and the exchanges. So for them, they're not hoarding it. The miners are spending a lot of money to create this Bitcoin. They're going to put it back into the market. So their wallets they're not really hoarding, right? And the other wallets that are being misrepresented are exchanges. Binance does like 22 billion a day in transactions. So they have a lot of Bitcoin in their wallets. So to an idiot who doesn't know what they're looking at, who's looking at the blockchain and they're saying, "Oh, this wallet has this amount of money in Bitcoin," they think it's a single owner, but it's actually a business. And by the way, I should touch on that real quick. One of the features of Bitcoin is that you can log onto the blockchain at any time and look at accounts, holdings, and transactions. That's also meant as a feature because they wanted to create a system that was transparent so that you could audit it. The only thing is you don't know who owns that account, but if you had an account address, and I do this all the time for fun, just put it in there. You can see what this person owns and what they hold in store. So it's kind of cool. And the other thing is, wealth is being distributed from OG hodlers. So you can see the bottom right-hand tab. This is just within the last, 30, 45 days. The Bitcoin addresses with over 10,000 Bitcoin decreased by 8%. Meanwhile, the ones with 1,000 BTC increased by 4%. So finally the OGs, the OG whales are unloading their money and distributing it across everybody else. Now, why is addresses with 1,000 going up? Because again, the media is lying. They're saying there's no retail interest. Well, no. People who can afford 1,000 Bitcoin are most likely going to be institutions, banks, hedge funds, endowments, things like that. So they're the ones buying it up, and that's good for us. Let's go to the next one, the last one.
Hey, David, why are they unloading the Bitcoin?
Oh, because so most of people don't understand. Most of these OGs didn't buy Bitcoin because they thought it would be worth like $30,000 or $40,000 today. In fact, they didn't buy it. Most of them mined it with their laptops, and not even because they thought it was money, but because they thought it was something really, really cool. Like there's a huge, huge, huge community of Bitcoin owners that you can read back on from the old days in the forums, and they really believed in the thesis of having something called sound money, which is something that's decentralized, not controlled by any government, a financial system that was controlled by people, by us, and that was not controlled by anybody else. And so they believed that thesis, and so they basically hodled, they held their Bitcoin this whole time. And I think it's just because now finally Bitcoin is worth something pretty substantial that they're going to start selling it. Because if you think about where Bitcoin was, let's say Bitcoin was just back in March 2020, it was $4,000, right? If these guys who really believed in Bitcoin dumped that Bitcoin, the value would go to the $100, if not the $20. So they would destroy the entire system. So these people are amazing. Like they held their Bitcoin this whole time just to make sure that, like, they're only unloading at the top, right? So they're making sure that whatever they're doing, there's somebody at the bottom to catch it, because they really want to foster the system for growth. Is that good?
Yeah, thanks.
Cool. And last slide is crypto. So this one I wanted to focus on Bitcoin because it's the most important coin. But I'm thinking you guys have some questions on altcoins, and so I just wanted to I wanted to dispel some myths because everybody calls them coins, but a lot of them are not, and a lot of them are scams. So the first big difference is Bitcoin is a coin. It's actually meant to be currency. It's a financial system. Ethereum, ADA, these are actually utility tokens. So if you imagine what a utility token is, if you think about the old school arcades, you take your money into an arcade, you can't use their machines, you exchange it for their shitty tokens, and with that token, you can put it in an arcade, you can start playing it. That's exactly what a utility token is. It has utility, but it shouldn't have value. Even though it does, it shouldn't have value. It's not meant to, but it's meant for utility. So Ethereum is meant to be basically a smart contract computer that lives on the internet. So what does that mean? So that means, like, if you wanted to create financial contracts between each other, like if I wanted to sell George a house and I wanted to take his car for it, instead of going through a bunch of lawyers and bankers, I simply write a smart contract. If then that statement, right? If George gives me his car, I give him my house, right? And Ethereum will execute this contract, and what you pay them with is the utility token, Ethereum, right? Ethereum just happens to be really the prospect of creating financial system based on smart contracts is just really smart, and so that's why Ethereum has value, because the tokens are really useful and it's being used a lot right now. So those are utility tokens. On the flip side, though, a lot of companies, you might have heard the word ICOs. A lot of companies, instead of getting funding through equity raises, what they'll do is they'll issue tokens. So they say, we want to start this business. We're going to issue these tokens at 10 cents, and you're going to fund our business. The problem with that is you don't own any part of that company, and the only thing you get back from the coins is the promise or the hope that it's going to be worth something more tomorrow if the business succeeds. But it's such a flawed business idea. Like, so what if the business succeeds? Why would the coin be worth anything, right? It used to be that the coins have some utility on the platforms, but this is why it's really important to read the white papers, or the websites that these companies give out, because 99% of the time you find that the coins have zero use on their platform. It's not a utility. It doesn't do anything for smart contracts, right? And so what you're doing is they're just basically crowdfunding their business, and you don't own shit. I've personally lost tons of money on this. That's why I know this lesson so well, right? The other thing, so yeah, Litecoin, Monero, those are actual currencies and coins. Funny note, Litecoin actually is Bitcoin, or was. It's the same. It was the same code, and a guy named Charlie Lee modified the code a little bit. Oh, it's a little advanced, but you might hear the word fork talked a lot about in crypto. So what a fork is basically a software update. Anytime these cryptocurrencies have a software update, it forks. So what happens is the chain with the old code goes one way, and the chain with the new code goes this way. And usually the one with the old code just gets abandoned by everybody, and it's just forgotten about. What Charlie Lee did was he reprogrammed Bitcoin to have certain other features, and he called it Litecoin, and he splintered off, and a lot of people bought into it, and that's how it created value. Monero, excuse me, Monero was built from scratch. It's like a security coin. There's a lot of features that help it with anonymity. Because, like I said, Bitcoin, you can audit people's accounts and stuff like that. Monero was designed specifically so that no one can track transactions, and you can't find any user data just by knowing the accounts. And I want to mention Ripple real quick because I hate them. They're shitcoin. So there's a lot of shitcoins out there. Ripple is a piece of shitcoin. And I say that because these jackoffs created a coin said it was a currency, funded their business to the tune of billions. And they actually, I think there's like 60 billion Ripple out there. There's even more than that. But all they did was fund a business that doesn't work. And the promise that it will work has kept the value of the coin up. And if you actually look at the reports, they sell some Ripple every month into the market, a couple hundred million Bitcoin, Ripple into the market every year just to fund their business. That's not profitable, right? So there's no use for this coin, and they're being sued by the SEC right now because the SEC is like, you basically did a security raise, and it's not a security. Owners of Ripple have nothing, and so that's illegal. And so that's why, if you want to get into crypto, really be aware that most of these coins are shit coins because people are just trying to raise money and give you nothing in return. It's a digital thing. They don't even have to spend money to physically create it to give you nothing, right? So be really, really, really careful about that.
Hey, Dave, can we go back to Ethereum for a sec?
Yeah.
Because I started hearing about that recently. Why? So is it just the fact that these smart contracts are gaining in popularity, and therefore Ethereum and utility tokens are gaining in popularity to do those exchanges? Like, maybe you can tell me a little more about them.
Yeah, I think okay. So the question was kind of explain how Ethereum works and the popularity of smart contracts, and is that why they're gaining in value? If you think about Ethereum, it's more like a platform. If you can imagine it as kind of like Shopify on the internet, it's not, but it's that idea that it's a Shopify thing. So what Shopify does is it enables people to do commerce with each other, right? And so it offers this platform, and what people do on it is up to them. And so that's what Ethereum did, was they created a platform that you could write really complex smart contracts with, and other features, like it's basically programmable money, right? So if you think about that and think about what you could do with that, there's a lot of potential, right? So a lot of other companies that built on top of the platform, they're called DeFi, decentralized finance. They're all on the Ethereum network right now because anytime somebody has a new idea about how to do something new with money, if you can program money to do stuff, these guys are building their businesses on top of Ethereum, and that's why Ethereum's worth so much right now, because decentralized finance is like gaining popularity. So I'll give you an example of a decentralized finance. So there's a business the banks do called invoice factoring. Basically, if I have a business that's cash flow, that's hard on cash flow. If I own a shoe business, right? If I have to spend like $100,000 from to buy supplies from my suppliers, it takes me 2 weeks to make this thing, and 3 weeks to sell it. There's a 5-week lag time before I get the money back and pay my supplier, right? So if I have a bad month or I can't manage my money, suddenly I owe my supplier before I have the money. So what I do is I go to the bank and I say, hey, I have this invoice from this customer. You know, these are all legit. You can check us out. I'm owed $1 million. I don't have that. I'm going to sell this to you for $950,000. You give me that money. You keep that invoice. I pay my supplier, and then they take the invoice and they cash it for the full value. So they get 50 cents on the dollar. Where is that? Whatever it is. Yeah, 50 cents on the dollar, or 5 cents on the dollar. Sorry. So that's invoice factoring, right? So some companies are building on top of Ethereum right now a way to crowdsource this thing. It's like, why should bank get to play in this field? Because they charge anywhere between 17 to 25% interest on it, right? So they're like saying, well, why don't we pool our money together, and then we'll buy invoices from companies, and then we'll split the profits. We can undercut the banks by like 10%, right? But you need to be able to do smart contracts with this thing because it's so complex when you start to crowdfund ownership, right? And so this is one of the beauties of smart contracts and digital currency, because you could do like really cool stuff like this, right? Did that answer your question?
It did. Thanks, buddy.
Cool. Yeah, man. Anybody any questions about trading Bitcoin? Anything at all? No? Are we good?
And I'll just do maybe a follow up. So with Ethereum, is Bitcoin the currency behind it, or like what is the financial, what monetary item is using for it? Like,
Yeah.
how do you create the value, right? Like you're talking about the transfer money and being able to do this, but what is it that you're using?
Oh, okay. So the question was, what is it you're using on Ethereum to facilitate these transactions? There's two answers to that actually. To build on top of Ethereum yourself, the utility token is called Ether, and it's used for gas. So basically, every time you want to do a transaction, you have to pay Ether as gas. So those are the tokens. What the decentralized finance guys are doing is whatever they're building on top of Ethereum, they're creating their own tokens as well, right? So that in that invoice factoring business, instead of us, connecting our bank accounts, giving cash, we're giving those tokens, right? So I put 100 tokens in, I might get 10 share of this invoice. When the invoice is due, I might get my 10 share back plus the interest. And that takes place all within its own ecosystem, within that coin, within that platform. But you have to have some Ethereum to pay for that transaction as well, the back and forth. So that's why Ethereum's worth like I think $1,600 right now, because the decentralized finances, people are finding some really cool use cases for it. And it used to be that there was a Bitcoin versus Ethereum thing going on. It was called the flippening, where Ethereum was gaining value against Bitcoin, and it was because Ethereum has this one extra use case that Bitcoin doesn't, right? But what this company three companies actually came out and did. It's called wrapped Bitcoin. I don't want to get to the too hardcore about it, but basically you take Bitcoin, you wrap it in an Ethereum token, and suddenly now you can use Bitcoin on Ethereum. And so that thing is like really blown up, both Bitcoin and Ethereum, because it's like if you think about it, the thing that we trust to hold our wealth, that's unhackable, that has all these amazing properties which is Bitcoin. If you wrap it in Ethereum, now it has all these really cool features that Ethereum offers you, which is all the decentralized finance stuff. So like this thing is like, people think like this thing is developing now. Like we're literally still in the Stone Age development of cryptos. When this stuff gets fully released, it'll be like some of the coolest, mind-blowing stuff ever. Just totally changes the world.
Thank you.
Blake, no questions? Anthony? No?
Sorry, it takes me a while to unmute this thing. I'm actually just looking over the price of them right now. There's a lot of talk about the bull market and how it's supposed to be going higher and higher.
Yeah.
Do you want to maybe just elaborate on that, how the breakthroughs happen on Bitcoin?
Okay. Should I do this? You guys can see this chart, right?
Yep.
Oh, let me see if I can unmute Blake, because it says he can't speak. Sam, can you unmute him? Or I don't know how to unmute him.
I thought that was him.
Oh, it worked now.
Oh, okay. All right, cool. Let me answer Anthony's when I get to yours. Sorry, Blake.
Yeah.
What is this? So this is a log chart of Bitcoin over the years. 2015. I actually started before this, but so Bitcoin's had, I think this coming rally now will be Bitcoin's fourth rally. Each time it's rallied has been for different reasons. This originally rallied back here was Mt. Gox, or I think Mt. Gox was here, and then so Mt. Gox was the first exchange ever where you could exchange Bitcoin. It was the first time where Bitcoin went from like a penny to $11. And what Mt. Gox was actually called, it's funny, it's called Magic the Gathering Online. So you used to be able to go on there and trade your digital assets. And so they discovered this thing called Bitcoin and realized you could trade that too. So they put that on the exchange, and that is what drove Bitcoin from like a penny to $11. It ended up being a big hack, and people lost Bitcoin. That's why you see this giant red candle here, because everybody sold off. It took like a full year to recover from that. But then other exchanges started picking it up for use and for trade. I think the biggest thing, there's several. So basically, every time Bitcoin rallies, you can probably see it better than weekly. Every time Bitcoin rallies, it's over some new development. The last rally that happened between 2016 and 2017, that started from when Japan recognized Bitcoin as an official currency. Then a bunch of the Euro countries also said that it was a currency. And so it was like the first time that an authority a government authority not only recognized Bitcoin but said, "Hey, we like it. We're going to use it as well." In Japan, you can pay people in Bitcoin right now. Companies do that. So each time there's a rally, there's some fundamental development in its use case that drives its adoption. This time, it's all institutions. They started to realize that, hey, this thing is not going to die. There's a funny quote actually by a famous investor. He said, if something is expected to die and it doesn't, then you should take notice. And that's been Bitcoin's story its entire life. It's been expected to die many, many times. And not only doesn't, but it always comes back stronger by like 20x. And so this time it's driven by investors, usually institutions. I'm pretty sure they've been wanting to get in for a while. But the problem with Bitcoin has always been a custody issue. Because it's the feature, right? Not your keys, not your wallet. Well, if you're a hedge fund and you decide to invest in Bitcoin, it's on this key. Who holds this? The CEO? You have shareholders. Like there's a huge security issue, right? So there's a whole bunch of reasons why hedge funds want it, but they can't have it. Starting, I think it was 2 years ago, a company came out called Grayscale. They created a trust. So what they did was they went out and bought a bunch of Bitcoin, put it on the OTC markets, and then people started being able to invest in it with just a regular investing account. It was just basically you're buying equities, right? And so that got the ball rolling. And as that got the ball rolling, more and more companies and institutions started investing in Bitcoin throughout all of last year to this year. And if we actually look at this breakout here, that breakout here was when Michael Saylor, so he runs a software company. It's been like 20 years. It's like $200 million company. Michael Saylor realized he had $4 million in his company's treasuries that he's not doing anything with. And because he's a tech guy, he understands Bitcoin. So he fell upon Bitcoin and realized, wow, this is basically all the things that I said in the presentation in terms of money, right? This is something that's not only the future, but it's better than the financial system we have right now. So he invested all 400 million of his company's treasuries in Bitcoin. And then he raised another 600 million and bought more. And since his buying, the value of Bitcoin is almost more than doubled. And so that woke up a lot of CEOs. Actually, just this past Thursday, he held a conference with 10,000 CEOs and CIOs of various companies around the world, explaining not only why you should put a company's treasuries in Bitcoin, but how to do it, like how to report it on a balance sheet in terms of like, because Bitcoin is so volatile, like how do you report it in terms of earnings and its value and all that stuff, right? He gave everybody the playbook, and that's what broke out. And that's why we broke out just this past week on news of that, because now looking forward, a lot of companies are going to think, well, we have, like, look at Tesla, right? Tesla's got like $20 billion in their treasury right now. Let's put 1% of that in Bitcoin. Like, why would we let it sit there accumulating no interest when it could do something, right? Provided that we don't need it immediately, right? So the combination of institutional adoption plus these companies putting their money into Bitcoin is what's going to drive Bitcoin up this year. And my guess has always been that when a Bitcoin ETF is created, so it's an exchange traded fund, basically what it does, they'll go out and buy a bunch of Bitcoin, they'll issue shares onto an exchange, and you can just buy these shares with your TFSA, RSP. That's going to open the doors to trillions of dollars of investment, because there are actually trillions of dollars out there in terms of pension funds, endowments, a lot of funds that are basically built not to lose value instead of accumulating value. They're basically built not to lose value. They're going to start putting their money in Bitcoin because bonds are giving like a 30-year bond gives like a 0.1% yield right now, right? And so all those things that you feel that are secure, like gold's not going anywhere right now, that they used to invest in, they're going to put at least a portion of their portfolios into Bitcoin now. I think it was 2 months ago, Mass Mutual, like one of the largest insurance companies in the world, announced that they bought $100 million of Bitcoin. And if I remember correctly, they have like something like 1.4 trillion under management of assets under management, because they're an insurance company, right? Their whole business model is hoarding money and storing it for use, right? Or investing it. And so They just put a fraction of their investments into Bitcoin. But imagine if the Bitcoin now is obviously given like a 2x return, but imagine Bitcoin gets to 150K. All the other insurance companies are going to be like, holy shit, right? Think of pension funds. We have a huge pension issue right now where pension funds are not funded enough to pay the upcoming boomers. There's going to be a huge generation of boomers retiring right now, and pension funds are not funded enough to pay them because of A, mismanagement, and B, because of just there's less and less people in the workforce putting in there because boomers are the biggest generation, right? And so what are they going to do? Their only hope is to put some money into Bitcoin and hope it does like a 2x, right? And so there's going to be a lot of institutional and financial, like a lot of money flowing into Bitcoin that's not retail within the next like 12 to 18 months, and that's going to drive this thing like quite a bit. Now, between now and then, though, just expect a lot of 20 to 30% dips, though. That's like Bitcoin's character. Now, the thing is, though, after enough, Bitcoin's market cap right now is probably like 700 billion. Over time, I think over $1 trillion, it will start to settle down a little bit. Like in just the 3 years that I've been in Bitcoin, I've noticed it start to settle down a little bit. Like a 50% crash was like a monthly thing, and now you see a 30% crash. You're like, oh my god. So the more money is in Bitcoin, the more it stabilizes, right? And so that kind of removes the final con about Bitcoin. They say, well, it's meant to be a store of value. It's cool. It's got all these features, but if I put 10 bucks in it today, it could go to $5 tomorrow. That used to be true, but that's going to be solved as more and more people put their money into Bitcoin. And I said I was personally expecting 150K Bitcoin for this rally, but a lot of actually way smarter people than me are saying like 250K to 400K, and they're getting to those numbers. There's a couple reasons. Like the $250,000 reason was they're saying because Bitcoin is a direct competitor to gold as a store of value, and I think there's $4.6 trillion of gold, just gold, not the financial assets around gold, but just hardcore gold around the world. So if Bitcoin was to take 10% share of that, it's at 250K, if not 275. So somewhere around there, right? So that's the 250K argument for gold. For Bitcoin for gold. There's one guy out there, or there's two guys out there saying 450K. I can't remember what the reasoning was, but they're all in Wall Street, and they do have some financial models saying that if this happens, then Bitcoin will be worth that much. And the fact that Bitcoin is worth like $30,000-$40,000 now, I'm actually even more bullish for the end of the year. I think it'll be maybe 150 to 200. So it's all speculation, but I mean, the last rally, Bitcoin went from, I think it started in 2013. Yeah, so that was the last rally. We retested old highs. When we broke out, Bitcoin was worth $764. That was December 16th. That's December 12th, 2016. Throughout that whole run, it went from $740 to $20,000 to November of the next year. 1 year. Right? We probably won't experience that kind of growth anymore, but going from 40,000 to even 150,000, that's like a hop and a skip for Bitcoin. I'm actually thinking it's going to be 50K around March. If we continue this breakout, we'll be at 50K by March. Yeah, that's it for that. Blake, sorry. What was your question, Blake?
I have two. You touched on a fair amount of it, and what you just answered there. A lot of it was in regards to what you think has to become for Bitcoin to stay as a force and like something that is going to be permanent in here. So one big thing you talked about was the ETF. That was going to be one of my questions with an ETF or something like that coming, where it's easier for people to invest in. Because even me myself, like I've been doing research on this, but I still am weary about what, for example, what app or what platform to put my money into to buy Bitcoin. So whether it be Mogo, whether it be Coinbase, whatever, So there's a question. So what if I wanted to just buy, say, $5,000 worth, so whatever percent that is? I don't want, like, I'm comfortable with doing my day trading stuff with stocks. So that Bitcoin would be something that I don't know enough about yet. So I don't want to follow these trends. I don't feel comfortable diving into doing day trading with this. So if I wanted to buy 5,000 worth tomorrow and let it sit there until 2023, whatever, what platform would you recommend would be best to do that?
Okay, so the question was the best platform to use as to buy Bitcoin with as an investment. Um, First of all, I think Bitcoin should be bought as an investment. To trade it is stupid. Like I trade Bitcoin futures. Like you can see my Binance account right now. I'm trading. I'm currently in a trade right now. I'm down a little bit, like whatever, 20 satoshis. But like I trade Bitcoin futures. That's not the same thing as the equity. I love Bitcoin, and I haven't touched my Bitcoin in like 3 years. I put it in my I put it in my wallet, and I haven't touched it. Because trying to trade it in and out of it is just stupid to me. To risk losing something so valuable in my mind
Yeah.
to just accumulate, right? So I don't do that. But for an investment, it's a great idea. And the thing is, like, you could buy Bitcoin from a lot of platforms right now with just a credit card. But
Yeah.
for you, if you want to spend $5,000, I would look for a Canadian exchange because I think the other exchanges don't allow you Canadians to buy it. We have some regulations here. So find an exchange, Canadian exchange. I heard there's like Bybit, Mogo. I use CoinSquare. Um, yeah, so I would find one of those because you could hook it up with your bank account. You got to go through KYC, know your customer, giving you your ID and everything. So they're all insured and whatever. And you can just direct deposit like 5,000 there, just one time it, take the Bitcoin to your wallet, and that's it.
Yeah. Okay, and then like my other question was just going to be like, when do you think? I don't know, you're not like you can't predict this exactly, but with all these companies starting to hop on, even with like the light in the mainstream with Visa, it's getting and stuff. When do you think? Do you think an ETF for Bitcoin is coming in the near future? Or you still think that's at least like a year or two away?
I know 3 ETFs are going through approval right now in Canada, and I think there's at least two that went for the reapplied in the states. The SEC keeps rejecting the ones from the states, but they never give a reason for why. But I think this time they will. And yeah, in Canada, I know personally there's 3 companies right now, and because a friend of mine on Bay Street, his family runs a fund, and he told me that there's a few people that he's talked to that are raising anywhere between 20 to $50 million right now to open up a Bitcoin fund. And I think 2 weeks ago I saw some applications for it too. I forgot what the names are, but I think in Canada will be first to adopt it compared to the states. And I wouldn't be surprised if it happened like in the summer or spring of this year.
So even outside of that, all of these stocks that are related to this, so Mogo, Grayscale, Riot. I remember you talked about Mara,
Galaxy.
Galaxy. That's a big one. Um, these the potential for these stocks is like endless. Like it's just beginning then, correct? For
Well,
the
see, the funny thing about those companies is that they are companies, so they're not actual. They hold Bitcoin, but they're not. That's not their main thing. It's not what they are. So, but the problem is because there is no Bitcoin ETF right now, they're being used as a Bitcoin ETF proxy. So they're investing in them, and if you look at their stock charts, it moves exactly like Bitcoin does. As soon as an ETF comes out, those companies will move a little bit more differently. Like if you're a mining company, you're gonna like be traded off your profit and profit and loss.
Yeah.
If you're right, if you're like Galaxy is different. See, Galaxy has like several hundred million in crypto, but it's not meant as an investment. So Galaxy is a company that services institutions. So
Yeah.
like if you wanted to go out and you wanted to short Bitcoin, if you're a bank or an institution, you have to
Mhm.
borrow Bitcoin from somebody. So you borrow it from Galaxy, add an interest rate, then you dump it on the market and you basically short it, and then you see what happens, right? So Galaxy provides services like that. So that's why I invested in them because they are a company. They have a great business model. They're profitable. They invested in a lot of VCs as well, or they act as a VC investing in a lot of companies as well, and they hold Bitcoin. So I thought this was like a 3-in-1.
Yeah, absolutely. Yeah, I went in shortly after me and you chatted about that, and I sold Friday too. I was up like 38% on it, and
I
I only put in a
know.
couple. That's huge, just sitting there,
I know. And you know what? Because Bitcoin's dumping right now, the share price is going to dump on Monday. You can buy back. And that's what I'm going to
That's
do.
good. Yeah, no, thank you. I love the
Well,
information that you gave to all of us. That was awesome. Helps a lot because it's still
awesome.
like, as much as you read on the internet, like it's still like nice to hear it from someone that's in this and from a more reliable source.
Yeah, appreciate it. Yeah, so like that's why I wanted to do this. If anybody had like just some random thing about Bitcoin and crypto, no matter how stupid you might think the question is, believe me, I probably thought about it. So like that's why I wanted to do this. So like if you want to ask, like go ahead and ask.
Yeah.
Yeah. Cool. Everybody good? Will? Oh, yeah.
So
Anthony.
right now you would say don't trade it, just hold it and then futures? But
Yeah. There's a reason for this. I bought my Bitcoin at the height of 2017. So I bought the $20,000 Bitcoin, and I rode that shit to like 3K.
wow.
So my problem was I got into the ICO thing. I was totally blinded by the potential of how much money they could make. So I got into ICOs first, and then when I slowly turned around and realized Bitcoin was worth something, I was buying it at the highs. But here's why, like, I see it as an investment. Like with all investments, you should only put your money in it if you truly have a good thesis for why it's going to be worth something later on. Like if it's a company, it's a good company. It's Bitcoin. It has uses, right? And so because I did my research in Bitcoin, I knew like I might be wrong about the price today, but I'm not wrong about the potential tomorrow. And so that made me that's why it was so easy for me to keep it all the way down to 3K. Because I'm like, I really don't care what it's worth today. It's going to be worth something 10 years from now. It's so useful. And so that's the same thesis I should give to everybody else. I'm like, because the question is, well, if I buy Bitcoin today at 40K, what if it drops to like 5 in 3 months, right? It's like, for me, it's like, well, what if it drops to 5 in 3 months? Like, this is not money you should be planning to spend. Like, this is it's security for your future, right? And there's a lot of arguments for like, or sorry, a lot of like, what do you call it? Comparisons to like those gold bugs, right? They'll buy gold, and those doomsday people, they're like, because what if Armageddon comes? I could use gold as money. Well, if Armageddon comes, I'm going to use Bitcoin.
Okay. And then if we do go through this fifth wave, what's going to happen to all the alternate coins? Are we going to see an increase in them as well, or are they going to be something that becomes a lot less looked at?
Yeah, it's already happening. So there's a cool relationship between altcoins and Bitcoins. It's called alt season. So what usually happens is Bitcoin will have a rally, and then when Bitcoin settles down, altcoins will follow. And if you see what happened, Bitcoin settled for like a month, and in that month, about $20 billion or $25 billion went into altcoins. Like Ethereum went from like $500 to 1,400. Litecoin went from like $80 to like I think it was 150 today. ADA, I still have some ADA. That's another project that I really believe in, but my ADA was worth like 10 cents, and it's now worth 60 cents today. So right now is what is alt season. So when Bitcoin, so what happens is the mechanics of it is that Bitcoin gets popular, retail investors invest, and then it makes some money, and then when it settles down, these dumbass traders, they're like, oh well, let's see what else we can get a return off of, and they start looking at altcoins, so they start going down the list, Ethereum, Litecoin, blah blah blah, and then so right now, after a while, when all the good coins get exhausted, you start to see the shit coins pop, and they'll go like 200%, 300% because it's really low volume stuff. But I guarantee you, if you try to chase those things, it'll be exactly like GME. And that's why I didn't get into the GME thing, because I've seen this over and over again in crypto. You're going to chase that thing up, and it's going to crash down on you. You're going to be left holding a bag.
Mm-hmm.
So
Right.
I would say like invest in an altcoin if you believe in the project. Like I have like 1% of my portfolio in ADA, and it's because I think it's a long shot. But if they could do what they're going to do, it's going to be better than Ethereum. And so I just put a little something there just in case it ever happens.
Okay.
Cool.
Yeah, I think that's really it. But this fifth wave, have you been tracking where you think? Because I know we talked earlier, and you said like tomorrow, Tuesday, is something where, like, to look out for it, but that's all just speculation too, right? So
Yeah, any kind of price action is speculation, but there are price targets. And there's a guy named Willy Woo. You could find him online. So he's called an on-chain analyst. And so what because Bitcoin is it's a piece of technology, right? So there's a lot of data, there's a lot of metadata you could read in the background. And so he goes and he researches the data and looks for trends in growth and compared the prices. Anyway, he's got some really good information, and he's predicting Bitcoin's going to go somewhere around, I think, somewhere around 190 to 250K. It's really hard to see projections because Bitcoin accelerates parabolically, but it looks like it's going to settle. This rally is going to settle around the 190 to 250K area. The thing with assets, like any kind of asset, is like a stock will trade the way you think it will until it doesn't. right? And those moments when it doesn't trade is usually pieces of news that changes the whole market's feel about the asset, right? So where Bitcoin's trending right now could be, or it looks like it's about 200K, but if a piece of news comes out, like let's say an ETF gets approved next month, I guarantee you 250K is like it's gonna be way higher than that, right? But if another piece of news says, hey, the US says they're gonna ban Bitcoin, then that's gonna change the outlook. So it depends.
Yeah, because I know even right now, like any Canadian bank, I had a hard time just putting anything into it right now. I haven't tried using Coinbase yet. I just thought ShakePay would be something quick and easy, and like right now, it's working, it's there, but I don't know where else to put it.
Oh, actually, my old roommate, we chatted last week, and he joined CoinSquare. He just used his debit card. He transferred a bunch of money over there, and he bought it like I think it was Thursday. So you could try that. CoinSquare is one of the better exchanges here. They're well funded by some banks and whatnot. I used to be on Quadriga. That was the one that got scammed. Their owner apparently died with the keys to all the Bitcoin.
Oh, jeez. Yeah, no, I got my two ledgers. I got the Nano, the X, and the S. That was one thing I actually wanted to ask. How do you link those two together? Because I know you said you could use one as a backup and one as your primary.
Yeah, I have three of them. I had the S, and then when I bought this, all I did was plug this in, and when the software will ask you, is this a new install or are you trying to restore a wallet? Just hit restore, and then you give the 24 words that the other one spit out, and you put it on this one, and so they're duplicates.
Oh, okay. All right, cool.
Yeah, it's pretty straightforward.
Yeah, because I went to go set it up, and then it was like two different ones. I'm like, how do I sync these together?
Yeah. You just make perfect copies of them. That's why that's why these are such a good idea. Like, what if I step on it? Like, what if? Like, as long as I have my 24 words. Oh, I should mention that. Thanks for bringing that up. Those people that lost their Bitcoin on like hard drives, or they lost their passwords, that's impossible if you do it right, because your Bitcoin's not on that hard drive, and your Bitcoin's not on that USB key. So you losing those things should be irrelevant. It doesn't matter what you use to create a Bitcoin account on the blockchain, whether it's a website or software or whatever. The money's always on the blockchain. What you're losing is your keys, right? And when you create an account, these software, what they do is they'll spit out 24 words to you. It seems random, but there's a mathematical thing behind it. But it is unique to every account. As long as you have those 24 words in that sequence, you can always recover a wallet. And so, like, that's one of the other use cases for people in third world countries, especially in countries with dictators, or don't allow moving of financial assets. Like, if you're in Argentina and you want to escape to Venezuela, you could cross a border, but with only the stuff on your back, right? But if you remember those 24 words and your money's in Bitcoin, you cross the border, you open up another software wallet, and suddenly you have your access to your wealth all over again, right? So this is why it's called censorship resistant, because like there's an article I posted just the other day, said this thief got caught by the FBI. He's got $6.5 million in Bitcoin, and they can't touch it because he won't give them the password. Like, that's why this is amazing, right? You know, not saying it's good for the thief, but I mean, for me and you, if we didn't want our stuff being seized by dictatorship, by a bad government, it won't be if it's in Bitcoin.
Yeah, and even I was just doing my end of the year taxes for Adapted and everything else, and I was asking my accountant, like, how can I start implementing taking crypto? And she had no idea what to tell me. She's like, I still have to look into it. And that was something I looked into that I'm still a little, I'm more questioning about, is that you have to keep track of all your transactions if you were to do that.
Yeah, and Canada is treated as I think it's in the same category as currency or commodity.
Mhm.
And so every time you buy and sell, it's a taxable event. And so if you lost, then you lost, right? So then like you just apply capital gains tax on it. But yes, every time you trade it, it's a taxable event. Also why I trade the futures, because it's a little gray area.
Yeah, and that's one of the things I want to learn more about, because I was under the understanding, even just before this conversation, that you're trading Bitcoin like you would any other ETF, like any other equity, and that's not the case.
No, yeah, I don't touch my Bitcoin at all. It's too valuable to trade. So Binance, the biggest, like several exchanges offer this now. It's called futures contracts. They have the same thing in equities market, but these are strictly for Bitcoin. And you're basically not trading Bitcoin. You're trading contracts of the underlying asset. Usually they have expiry dates, but in these platforms they don't. So you can just trade them all the time. And the reason I like it is because I can keep like 95% of my Bitcoin in cold storage, and I can take 5%, put it on exchange. Because anytime a Bitcoin is not in your custody, it's at risk. And so if I only put 5% on this exchange, if they get hacked, if they go down, whatever, I only lose 5% of my assets. But because I trade futures, they give up to 125x leverage. I don't recommend that, but if I had $1 on there, I could take $100 position of Bitcoin and trade that. And so that's why I trade the futures, because I have very little money on Binance at risk. But because I trade with leverage, I can still use meaningful sizes and trade back and forth.
All right, that's something I'm gonna have to address with you a little later.
Yeah, it's cool stuff. Oh, and the other cool thing about it is you could choose to get paid out in USD or you get paid out in Bitcoin. Because I'm always trying to accumulate more in Bitcoin, so I get paid out in Bitcoin. So all I'm doing is creating more Bitcoin with nothing, and that's why I love it.
All right.
Cool.
Yeah, I think that's it for me right now.
Yeah, I think everybody's good, right?
Yeah. Thank you, Dave.
Awesome. Thanks for coming, guys.
Hey Dave, do you have a referral code for your coin square?
Yeah, I think so. I can send it to you.
Awesome, thanks.
Awesome, buddy. Thanks, everybody.
Thanks. Enjoy your night,
All right,
guys.
thanks, Dave.
Yeah, take care. Hey,
All right.
bye-bye.
Ciao.
Sam, still there?